We are back for the weekly close. The gang is all here to discuss the latest economic data, Amazon earnings, what's going on in the markets, all of that and more today on Money Never Sleeps. Welcome back, everybody. Thank you for joining us today as we wrap up another fun week in the markets. Before we get going, do us a favor, hit that like button, subscribe to our channel. Nothing we say is financial advice, so please do your own research before making any buys or sells. Kev, Mr. House, excited to have you with us today. Kevin, I was thinking while I was watching that awesome intro video, we're going to have to edit it a little bit to add the courtroom sketch from SBF's trial at some point. Maybe the sketch of Caroline as well, like just get those in there. Because I feel like our intro video can be this evolving timeline of everything going on in crypto. Maybe we toss in once CZ is in handcuffs, we can throw that in there as well. That would be fun. But we got a bunch to talk about today. Latest economic data, some big earnings from Amazon. Markets are all over the place. We saw crypto take a little hit. It's bouncing back now. We're seeing TradFi. The Dow is dumping before our eyes, down 420 on the day. You love that meme number continuing to take a hit. We see the VIX rising up 21.6 now. The dollar is holding strong. What are you focused on today, Kev?
Yeah, man. It's there's a lot to be keeping your eye on. Obviously, TradFi I think is really important. I said yesterday it would either be really bloody today or it'd be kind of lackluster. And then this morning when we got the PCE data, I was like, there's a good chance we get some reversals in the market today. We did. We got a little bit of everything, right? I mean, S&P is down 0.71%. That you can say that's kind of the neutral one today, but NASDAQ was up a lot higher, got complete reversal. It was down to, only up 30 a while back. You can see that the Dow is absolutely tanking. The dollar here is in a really weird spot. I thought it would have, gone up a little bit, but it seems like a lot of what came out with PCE data is holding it back. But I think that once we get a little bit of these escalations beginning to occur in the world, the dollar is probably going to show why it is the world's reserve currency. But yeah, I'm keeping an eye on that. Keep an eye on, crypto, seeing how many stable coins they send to these exchanges. But just a little bit of everything, man. Everything's all over the place today. It's very exciting.
All right, let's look at some of the data that was released this morning. We had personal income that came in 0.3% increase month over month, down from the 0.4% in August. Disposable personal income. So here's something funny that the Bureau is now doing. In the latest release, which I've been looking at these releases every month for a while now. I don't remember seeing this latest row of chained 2017 dollars when it comes to disposable personal income and personal consumption expenditures. And I got to be honest with you, I don't give a fuck about what 2017 dollars are doing after we printed the most amount of money in history back in 2020. I'm sorry. I couldn't care less about what my money could do in 2017 or vice versa, because that shit don't matter. I'm not paying 2017 prices for a dozen eggs or a gallon of milk. So you can take that data, shove it right up your ass. So we have for disposable personal income up 0.3%. Talked about that yesterday with GDP. That might look good, but if you look deeper at some of the GDP data around personal savings, it ain't pretty. PCE at current dollars came in at 0.7%, which is bigger than the 0.4% in August. In the chained 2017 dollars, it came in at 0.4%. Whoop-de-fucking do. For just regular PCE, we have 0.4%. For the core, excluding food and energy, 0.3%. Once again, I don't care about the excluding food and energy because that makes up a lot of people's budgets these days. And then year over year, we see PCE at 3.4%, the same as it was in August, the same as it was in July. And core is at 3.7, down slightly from August. So overall, people can spin this whatever way they want. I don't think this is particularly good data. We're seeing that the markets are now pricing in no rate hike next week, a little bit of an increase in the probability of a cut by 25 basis points. I don't see that happening. And then for December, we now have it as about 76% chance of no rate hike or a cut, and 23.5% chance of 25 basis points. So that is what we are seeing on that side of things. I'm curious from you guys what your reaction was seeing this latest round of inflation data.
Take it away, House.
I mean, I always just think it's really funny when they publish the report excluding food and energy, because in Russia, there's a common joke in the Putin era that there's a battle between the refrigerator and the television, right? You have to choose one because there's a lack of funds and you have to make that choice. Do I want energy or do I want food? And, when you think about just the hierarchy of basic needs, food and shelter are on that. So excluding two things that humans can't live without, and then trying to summarize that into an economic summary, it's like, okay, so excluding humans, this is where the economic data is headed. It's like,
I love when House comes on because we get the merger of economic data with Maslow's hierarchy of needs. You gotta love it. Where else on YouTube are you getting content as good as this with such thoughtful commentary? Everyone else is just out there. The Moon Boys are saying it's October, that we're back. We're so back. Guess what? We are so not. And Mr. House out here just dropping bombs on people, not literal bombs. I probably shouldn't make that joke these days because things are a little fucked up out there. So, yeah, that was bad timing. Just like how we're not saying nuking the market anymore. We're saying dump, all of that stuff. So, Kev, on your part, I know you're going to say that you don't believe these numbers because you don't believe anything the government says.
How did you know? I was going to say that verbatim. No, I was going to say this just kind of proves that we're in a vibe session, guys. There's definitely indicators pointing that this is a vibe session, 100%. And, it just is what it is. Things are getting better. Janet Yellen said so. Her haircut told me. But no, this is 100%. I think these are two sets of data that came out right at the perfect time when there's a lot of things going on in the world where had they been bad, obviously the markets probably would have tanked considerably. I think the bottom is falling off in the market here. I'm not saying it is because we can't get ahead of ourselves, but I mean, we're down, for the Dow, we're down like 9% since the height in July. We're down 11% for the NASDAQ. Maybe, it's around 11% now. It's up a bit today, but we're also down, 10 point something for the S&P too. So people are definitely in corrective territory. And if we had some bad data, it's likely going to tank the market. So I'm a little bit skeptical about some of these numbers. And again, these projections, you can say anything. And I mean, if you're presenting the data, you can also present what your expectations are for them too. So I think that we just need to see how consumers are doing. I thought that the income versus spending was really interesting today. We're saying that, they're spending more than the income coming in. For a lot of people, it's down. So that just isn't a sustainable metric for how consumers are going to be going forward. And yeah, I agree with House 100%. I'm going to choose the refrigerator every single time. I know winter's coming, but both are just equally as important. And cutting those both out of the report is just total BS in my opinion.
All right, let's quickly talk about Amazon earnings. They came in well above expectations. Revenue at 143.1 billion, about 2 billion over expectations there. Big part has been, just like we said with Meta yesterday, cost-cutting measures. Getting rid of, staff that isn't needed, cutting back, putting AI to work, streamlining a lot of these processes that just were costing them money, and it's helping the bottom line. So, Amazon's looking good there. They are one of the few companies having a good day as a result of that, currently up about 7% on the day, which is quite nice for Amazon shareholders, I being one of those. Meanwhile, it's kind of holding up tech in a way. Like a lot of like Meta is bouncing back today. I'm not too shocked after how big of a sell-off that was. But, right now, Amazon and Meta are really just holding up the rest of tech because we're seeing everything else into the red. Let's talk about gold for a second here because we are seeing another big run on the price of gold. If you look over the last, holy shit, this is just a few days. Since the 6th of October, gold is up 10%, which is not a small number. And we are seeing a lot of people, fear in the Middle East, going risk off. All of these things contribute to this. But, Kev, we were texting earlier, it hit that number of 2008, perchance foreshadowing some things to come. It's getting spooky out there. Talk to us about gold.
Yeah, it comes after 2008, right? 2023. Oh, okay. Well, you're going. I'm taking this as a metaphor, man. Or this is a joke, but yeah, this is here we are. Here we are, 2008. I said that there's a good chance that we could see all-time highs for gold. I still believe that we could. I think a lot of the things that are going on in the world right now are very scary for a lot of investors. And, we're seeing a lot of, 2009 right now, we're seeing a lot of people flee, right? Obviously, gold did really well back in May. It was shooting up a lot post SIVP collapse. I think a lot of people were just like, maybe I'll have somewhat of a risk off, exposure. Gold shot up, pulled back in the summer, and here we are. It's climbing once again. I would necessarily be, I don't know. It's kind of hard because obviously there's definitely more room to the upside. I think for gold. I mean, if we could just be filling out this giant pattern, this parallel channel going up, it could test 21,883. It could just climb all the way up here, but this is just another sign that people aren't in a risk on mode right now. And that's what we're seeing some of the major indices bleed for the past 2 weeks, right? So I think, again, we're getting news that there's probably going to be the ground invasion tonight now from reports over there. So I think that this is probably going to be something that's going to be, a hot commodity, no pun intended, for the next few weeks, at least in my opinion. I think that there's a very good chance gold's going to go to all-time highs. So I'm bullish on gold. I know that there is the fact that we are in the parallel channel right now. Maybe this breaks out of this and there's a different channel or a different pattern that's playing out here. But I do think that if we go to 2083 and we break that, all-time highs, guys. So definitely see where this plays in. If we find resistance at 2083, that'll be where we find resistance. I don't necessarily think we're going to find too much of it beforehand, but we can also see golden cross right here. Gold's been on a piss missile straight up. If we look at the monthly too, or the weekly, there's still room to go up. We'll probably get into the overbought today on that. And then the monthly, it looks like it came down, but it can go right back up into the overbought. It's happened in the past, right? Came down here and then went even higher than that. So keep an eye on gold. I think there's a lot of things in the world that are definitely making this a very, very enticing asset to be holding for a lot of people right now.
All right. I want to go to House, and I want, you've been, keeping your ear to the ground, really focused on things that are going on globally. Can you kind of give us your latest thoughts on what we're seeing, maybe not just in the Middle East, but what has really been getting your attention, how it's impacting the markets, and if there's anything, not financial advice, obviously, anything actionable on our end or on your end that you've been doing, to hedge or try to find value?
Yeah, I'd say starting from probably the smallest impact on financial markets, but still interesting just as far as the domino effect of conflict seems to be falling. Last night, Ethiopia claimed Eritrea violated the Tigray Treaty of Peace between the two of them, and there seemed to be a military buildup along a shared border alongside Djibouti. So that's just, Africa has been going through a lot of civil unrest in various countries, and there's been a few coups, civil wars following, throughout the year. And, that's just not great to see as a lot of these nations are still developing. That's going to pause that progress. Another interesting thing is there's been a large uptick of Iranian proxy attacks against U.S. targets and installations. So we've seen several in Iraq and also Syria. The targets in Syria, one was an oil field, one was a gas field. I'm not really sure what the difference is between those two, quite frankly. But, you don't like to see foreign oil getting interfered with, especially when we're kind of protecting and occupying that. Interesting side note from that, Berkshire Hathaway did purchase, I believe it was 3.92 million shares of Occidental Petroleum yesterday. So, as far as the Iranian proxy attacks go, I think there's kind of a twofold effect here. There's, the potential effects on defense and oil industry stocks, because those seem to be what they're targeting. They're targeting military installations and also military protection of oil fields. But then also, part of the reason that is speculated on why Iran is doing this is because of the U.S. support for Israel during the ongoing conflict in Israel, which brings us to Israel and Palestine. As far as what's going on there, it does seem like the ground invasion is getting near, which would, really, really escalate that attack, or not the attack, but the impact on markets that we're already seeing. It seems like the past few days, as they've been trying to hold back the invasion so they can get humanitarian aid in or just get more Palestinians out. The Israelis have been ramping up airstrikes, especially during the night. That's where they've been, sometimes going into Gaza, West Bank, as well as just really ramping up the amount of airstrikes there. Iron Dome I've been seeing videos of it just shooting out missiles like crazy, doing its job. And, the U.S. funds, they build the missiles for the Iron Dome. So that's defense. If we see more Arab nations and more Middle Eastern countries start to really figure out, okay, what role do we play in this? Do we need to get involved? That's, again, oil and defense, right? So I think those are probably the main two things. I think banking, you're going to see in tech. Israeli has a large tech presence. I'm not sure where that happens with banking, but when we start seeing world conflict and we start seeing this flight to gold, that's where you start to see, okay, maybe people are withdrawing a lot more. Banks are seeing more uncertainty coupled with the looming credit. I wouldn't call it a crisis, even though I want to call it a crisis, but we've got so much debt. We've got so much bad real estate debt. We've got so much looming credit that people aren't paying off. So, we're really just kind of spiraling into a weird mixing pot of what's going to come out first and bite us.
Interesting. Speaking of banks, Kev, what is the latest right now with the banks in the market? I know things are looking ugly. We're seeing a lot in tech as well. Timely, the house said it, give up some gains that they had earlier in the day as we move to the close. To me, once again, I wouldn't be surprised in this last 40 minutes of trading if we saw people exit any sort of leverage positions they have, just because, going into a weekend, Lord knows what could happen. There could be an invasion this weekend and how that'll impact the market. So it definitely seems like traders are starting to maybe exit some of their positions if they were going long. I think if people are short, they're probably going to keep their positions open, because what good news is really going to come this weekend that's going to change their minds there. But what are you seeing with JP Morgan and then any other banks?
Yeah, absolutely. House hit the nail right on the head when he was talking about, flight to safety. You're going to see banks start to go down. Gold's going up. We're seeing it right here. And I didn't even notice the banks. I knew JP Morgan was down today because Jamie Dimon announced that him and his family are going to be selling, I believe, $141 million worth of shares. Obviously, it's the first time they've ever taken profit in his tenure as CEO. But we're seeing that it's down 3.82%. It's down about $5.38 today. But there's a lot of banks that are down. I didn't even know this. Bank of America right now, which we'll take a look at. That is pretty much did a bearish engulfing candle from yesterday's gains. It's down 4.33%. It's trading at $24.99. We know that there's historical support right here around $24.33. So that's looks like something that we're gonna have to keep an eye on. And again, I'm gonna pull up this real quick with Bank of America. We talked about this for a long time. This blue line here has been offering support since 2016, 2020. Here we are, and nothing bad has really necessarily happened in the market yet where it's spooked it, right? So if we lose that, there's a good chance that we could be trending pretty fast to the downside, maybe finding support from 2020, maybe 2016, maybe even down here from 2011. Ultimately, 2008 might be the bottom for that if it gets really bad, but these bank stocks are bleeding real quick off of news. Nothing really crazy has happened. Again, we know that there are paper losses, unrealized losses that they have yet to take. So if there's a huge, deposits start to leave, start withdrawals, it's going to be something that's just going to cascade. BMO Harris, you can see that that's down 3.47% today. It's cascading down. Looks like on the weekly, we're about 38 minutes away from getting a death cross on the weekly, right? It's touching right there, but it hasn't crossed completely. But, next week, come Monday, there's a good chance that we could be playing that video for BMO Harris. So let's keep an eye on that. That's going to be, the fact that it lost the 80 level is really big. It looks like it's filling out this gap. There's a gap right down even here between $64 and $63. So we'll keep an eye on that. Let's look at PNC. And again, I'm pulling up the ones that we've talked about in the past that have, tons of FHLB loans or BTFP loans that are currently out. You can see that PNC kind of broke this level here. It's going down. It's the double test at 110. Looks like it actually went down a little bit lower than that. So it'll be interesting to see how that plays out. See this on the daily. We're down 3.08%. It looks like it's oversold in the daily, but we have to remember stocks can crash from oversold areas. So let's keep an eye on that. We won't say that anything bad's happening, but we're definitely seeing some red across the banking sector today. Let's see. There was one other one. Let's take a look at Schwab and then Citigroup real quick, just looking at the charts. Schwab, it's finding, it's under $50 a share right now. So that's a pretty big move. It's still pretty overbought. I mean, it's still in the middle range for the daily. So that could be coming down fairly soon. But this blue range right around 48.92. We're going to see if that holds going into next week. And then Citigroup, that's the big one because we've been closing. Yeah, once again, we got rejected. This is the one that we probably should be keeping an eye on because this is kind of scary here. So I've talked about Citigroup for a while, and I said that this is a historical bear flag that it's been putting in all the way since 2009. Bottomed out here in 2009, and it's just been trading within this channel. Top of it in 2018, got a double test in February 2020, and then we touched down here in April of 2020, and then here we are in November of 2023, and we're starting to close below it. We didn't close below it back here, but we are closing below it here. And with 37 minutes left in the trading week, if we close below this, there's a good chance that, hey, this isn't our support channel anymore. Could we come back and retest it? Sure, absolutely. But if we're looking at this on the daily, we did retest it, and look what happened. We got rejected right off of it. So unless this decides to reverse today or next week, if we start seeing some days out of this, I'm just going to say there's a good chance we can go to the origin of this entire bear flag, right? So that would be where we are currently at 38.20. I mean, that could take us 74% down to about $9.79, right? And we do know that if we look at this on the macro, let's go to the 12-month, which is not a chart I use often, but we can see how psychotic Citigroup's chart is, right? It went from like $570 a share to the low at roughly, what was the low back here? It says $9.70, but I think that's, there's a good chance that we could even go lower than that. If something bad, very similar to 2008, credit event, deposits are leaving, people got the trade wrong, there's a good chance that we could start to see this absolutely collapse. And again, look at this. Volumes are decreasing as it was going up over time. It's bearish divergence.
I was going to say it. I was going to say it. I was trying to show that I'm paying attention and I learn things here.
Well, if you
held it.
You got to get a tattoo. This is bearish divergence now across your throat. That's the only way that people believe you. But yeah, this is bearish divergence. Jweb called it, and this is on the macro. I think that there's a good chance that we could see that $9.70-something. I also think that it's very possible that we can go lower than that. Could we go to like $2? Sure. Could we go to $0? Absolutely. But I think that origin of that parallel channel needs to be tested. Guys, it's a long way down, and nothing bad has happened with the banks yet. Obviously, Silicon Valley Bank happened. We did get some news the other day about the bank term funding program. They are still borrowing loans from the Fed from that from that window. Those are expiring come March 15th of 2024, I believe. It's 1 year exactly. That was what was in the the plan that they had written up. They got to be paid back by then. So the fact that you're seeing them borrow this late in the game, I don't fucking think banking is safe at all. So definitely be safe for your banking. Watch your funds. We know which ones are in bad shape. The ones with the highest number of FHLB is equity. We do know that that's Schwab, PNC, and I believe KeyBank and US Bank. So keep an eye on that. But yeah, banking looks fucked.
Okay, let's take a look at crypto as we near the end of the week. I'm seeing on the charts on the daily Bitcoin way overbought. On the weekly, it's moving toward that territory as well. And on the monthly, it's also overbought, starting to move down a little bit. And I'm curious, in the near term, obviously things happen. We can't predict the future here, but I'm curious, over the next couple of weeks, Kev, where do you realistically see Bitcoin winding up? There's the unpredictability of what's going on in the Middle East, of what CZ and Justin Sun are doing with their stable coins to try to prop up the price. But if you had your say, where do you honestly believe that we're going to be in a couple weeks?
I'll preface it with this. I did the math last night, how much USDT and USDC was being sent to Binance's exchange from external wallets. It was a little bit over $8 billion that they had sent. So obviously the volume that came in from that's pretty significant. The question is, and I think House would probably agree with me here, is we're not necessarily seeing a lot of spot buying here, right? I think we're seeing a lot of perps, which means that people are betting whether the price is going to go up or down. And if we don't have anyone that's taking this supply, then the price is going to go down because they need to find demand. There's no demand zones necessarily up at this level. I am not saying that the price can't go up from here. I definitely think, I'm accounting for worst case scenario always, right? I think that we were probably going to see 36,259. There's a good chance we could push up there. There's a bit of liquidity there. I don't necessarily see why it would push up higher than that. There's just not too much liquidity that I think it could grab from there. And especially if they're trying to offload a lot of these assets, I think that if they're not able to make the money by, offloading a lot of the supply, there's a good chance that they're just going to try and wipe people out of their positions, right? That's what the importance of spot buying right now. And since we're not seeing that, I remain that we have to go up for a wave 5. The only way that this would be invalidated if we went lower than our wave 1, which is currently sitting at 28,598. So I don't necessarily see that is reasonable what's going to happen next. So I think it's going to happen one of two ways. Either I got this entire correction, this impulsive move wrong, and this is the 5th wave, and we're going to start coming down, or this is the wave 3 up here. We're going down for wave 4 if it's not already put in. Obviously this gap down here would make sense, and then we're going to go wave 5, which would be a little bit higher than what we currently put in the height. So above 35, whatever that is, 35,280, something like that. That's a scenario that I think is going to happen. So I think that's more short term. But if we're looking at this in the weeks to come, I think that we're due for a correction. I think this might be the end of our massive wave to the upside here, this corrective wave that we've been putting in since the beginning of the year. So if we're looking at this as a ABC correction, 69K is up here, 34.50 is down here. That's a 50% move that it's made from this, from where it once was. I'd anticipate that at least a 50% move coming down here would make sense, right? So from 34, what is that, 17K or so? So that would fill the CME gap 100%. That is down at 20K. However, there's a lot more things in this world that are really that are going on that do not make it kind of a good scenario for Bitcoin or for any assets. First off, this is Bitcoin's first recession, if we are going to recession, right? That we don't know how it's going to react. That's one thing to keep in mind. But also, there's another CME gap around 9,007. I think it's $9,700. Yeah. So that tells me that there's a possibility if we start getting really low, we could see a wick down there. My target's been 9,750, just because there's a bit of support down there. It kind of lines up with the CME gap. So I'm open to that. Doesn't have to hit it, but I'm open to that scenario. I think that we are on the very edge of Bitcoin's move to the upside, right? I think we're one bad news day away, or just the point where Justin and CZ can't print much more. We're seeing a lot of pressure put on them. I mean, even from SBF today, right? He said that CZ told him back in 2018 how easy it was to defraud the market operating a crypto exchange. I don't know if they're going to use that against them, but there's a lot of pressure and a lot of light on CZ right now. So anything that's going to push the market up, I'd be very cautious to see if they are willing to do it. And if they do, it just shows you how desperate they are, and they're actually in a bad spot. So for Bitcoin, I think a little bit higher is the reasonable thing that's going to happen, because there's just so much money that he pumped in. But then after that, I think we're going to be going towards 20K. I think that's going to be the next major target that we're going to head down. How do we get there? Either, a 5-wave move down, corrective pattern all the way, or we could just liquidate people all the way down. If there's no buyers here and we get bad news and people just want to get out of the market, we're probably going to fly down like crazy. But again, can't get ahead of ourselves. Nothing's happened yet. But I do think that if there's issues in the banking system, crypto is no exception in that regard.
Kev saying that Bitcoin is doing its Linkin Park impression. It is one step closer to the edge, and it's about to break. Okay. Anything else we want to touch on as we wrap up the day in the markets? We are seeing things start to get bought back a little bit. Dow is cutting its losses a little. NASDAQ seeing a little bit of a move back up 0.5% now on the day. VIX going down a touch, is right above 21. Anything else that you think is worth touching on? Otherwise, don't worry, we'll be back next week for a full week of action. So give me any final thoughts you have. I'll kick it to either one of you guys for that.
I got nothing right now. How's you on? Got anything?
Yeah, since we're closing on Bitcoin and we've been talking about CZ, there was an interesting article by Bloomberg that came out yesterday that so at the peak of the bull, CZ was worth around 89 billion. At the start of this year, he was worth roughly like 29, 30 billion. He's down another 12 billion. So he's down to 17.2. So I think that's always interesting to keep in mind while we're, theorizing and speculating around what Binance may or may not be doing. The other thing is, Kevin's pointing out Bitcoin could be going through its first recession. And, that's a lot of why, or at least a lot of what Satoshi discusses in the beginning of the Bitcoin white paper is that's what inspired him, is trying to kind of create, that next peer-to-peer ultrasound money that's recession proof. So I think it'll be interesting to watch how Bitcoin performs if we do enter, a really bad recession worldwide. I don't know why that word just escaped me as I previously said it. But, not that I'm anticipating Bitcoin to hold up. I'm just genuinely curious to see how it reacts. But I think those are, two things that popped into my mind that I'm like, yeah, I wonder if someone else would find interest in this, and it might send them down an interesting rabbit hole in their mind.
I mean, CZ and I basically have the same net worth at this point. So, that's good news, I guess. All right. I kid, obviously. Thank you, everybody, for watching today. We'll be back next week. We got all sorts of fun stuff to cover. We're going to hear from our good buddy, Jay Powell. We're going to get more tech earnings. I know Apple is on deck next Thursday, plenty of others also. It's going to be fun. We're heading into the last 2 months of the year. We'll have the monthly close on Tuesday. We'll get the Jay Powell presser and Fed decision on Wednesday, those Apple earnings on Thursday. We got a good one. So rest up this weekend, get some time away from the computer. Don't liquidate your shorts or whatever. If you've not yet, do us a few favors. Hit that like button down below, subscribe to the channel, drop a comment, share us out on social media, all of that good stuff. I know we've added some subscribers. Appreciate everybody who's checking us out. We will do the best we can to keep you up to date with some unbiased, no bullshit news and an approach to the markets that hopefully helps you be a better investor. So thank you, everybody, for watching. Have an awesome weekend, and we will see you next week.
Take care, everyone.